You're listening to the Unlocking Financial Freedom podcast, episode number 5. In today's episode, I'm starting with a new series on personal income taxes for the salaried employee and how to avoid tax legally in South Africa. So please do stay tuned. Hello, sanibonani njani, and welcome to another episode of the Unlocking Financial Freedom podcast. I'm your host, Chief Economist, but you can also call me the government guy, or by my birth name, Usamkelo Magogo. This is the first episode in a series on personal income tax for the salaried employee. I've just finished a 4-part series where I was speaking about financial planning and financial freedom, basically showing you guys how to achieve financial freedom through applying personal financial planning in your life. I do encourage you to check out that series and also come back to this one again. But I do encourage you to check out that series after listening to this episode. You will get a lot of value on that one if you didn't get a chance to listen to it. So a lot of people hate paying their taxes, especially you will get a lot of value on that one if you didn't get a chance to listen to it. So a lot of people hate paying their taxes, especially taking into consideration that the government is really misusing a lot of these resources. It's misusing the parastatals, it's misusing the money from our state coffers and so on. So you see a lot of service delivery protests around South Africa. In the past week, you've been seeing a lot of protests in different areas of the country, in Johannesburg, in the Gauteng province, in Pretoria, in Gomora, in the Western Cape. There's a lot of service delivery protests, housing protests, and so on. And we're seeing a lot of land grabs. So people are just fed up. At the higher end, where people are paying in excess of 45% of their marginal income, people earning around 1.5 million or more than 1.5 million, those people pay 45% in terms of taxes, in terms of their marginal tax rate. Those people are speaking about a tax revolt. You look at the likes of the DA person, Helen Zille, or the former DA leader, Helen Zille, speaking about tax revolts and saying that people should not pay their taxes because the government is misusing their funds. So at the higher end, at the higher marginal tax rate, where people are paying a lot of tax in South Africa, people earning in excess of 1.5 million rand, they're paying about 45% of amounts that are above 1.5 million, and those people are fed up. And at the lower end, at about the 18% marginal tax rate, as well as people who are below the tax threshold, who are effectively not paying any taxes, those people are just fed up about service delivery and so on. So you find that in South Africa, a lot of people hate paying taxes. In the world at large, even not even in South Africa, it's always a grudge payment. But it's quite important for us to use the analogy of taking care of the goose that lays the golden egg. Because the reason why we pay taxes is because we want to take care of the country that feeds us, the country that we make money on, the country that gives us this environment where we can make money, where we can enjoy our freedom, our creativity, where we can be safe and so on. So that's why we pay taxes, basically, to take care of the goose that lays the golden egg. Because if you don't take care of the country, if you don't maintain it properly, then who is going to maintain it? Because if you look back at church, for instance, if you look at church, a lot of people in church who don't understand, they might hate paying their tithes in church. But if you look at it, the tithes that you pay at church are there to take care of the church. They are there to maintain the house, the structure, the physical structure of the church, and also to help other people that don't have the money to help themselves, basically. That's the same analogy that is used by the country and so on. So I think the country, the national governments of the world stole this concept of paying taxes in the church, through the tithes part of the church at least, not necessarily taxes, because taxes were there also in ancient times. Because in scripture you see where Jesus invites a sinner to have lunch with him at the table of the tax collector, who was seen as a sinner at the time because they collected taxes and sent those taxes to Rome, and that Rome government was opposing the Jews at the time. So tax collectors were seen as evil individuals, and Jesus speaks to this sinner and says, I will come to your house and have lunch with you. This also spoke to not judging people at face value, but understanding them and listening to them. So that's what Jesus did. So the concept of taxes is a old concept. It's not something that just came about now. In the Bible, it's biblical. The Bible is quite old. So taxes have always been there. And also in the church, tithes have always been there in the church, where you pay your first fruits and tithes in order to take care of the church and so on, and everyone who's in the church. So in the church itself, people are also fed up with paying tithes, because they see a lot of pastors and a lot of stewards and leaders not using the money effectively, and effectively wasting the money on their personal things and so on. So it's kind of a parallel thing, and this blog is about financial freedom and financial wellness, and there's a dash of spirituality. So that's why I'm making an example about the church and about taxes in context of the church. So let's get more into the tax part of it. In South Africa, the income tax is levied in terms of the income tax number 58 of 1962. Now, this act contains all the provisions for levying 4 different types of taxes. There's one, normal tax, which is like your income tax and the capital gains tax. There's donations tax. Number 3, there's dividends withholding tax. And number 4, there's withholding tax on royalties paid to non-residents. So I just want to be specific. This series will be focusing on calculating SA normal tax, which is your income tax and capital gains tax, and showing you how to avoid paying more income tax and more capital gains tax to the government. In a legal way, obviously, not in a way that is unlawful. So the word person now in this context does not only refer to natural persons. So if I talk about levying normal tax on all persons who receive a taxable income, the word person does not only refer to natural persons, but also refers to companies, close corporations, estates of deceased persons, clubs and societies, trusts and other legal entities like churches and so on, non-profit organizations and charities. Those people or those entities are referred to as people, because they are the eyes of the law and so on. Now, certain institutions are also known as non-tax-paying institutions. So you look at local governments and churches. In terms of the Income Tax Act, these institutions are not subject to tax, but they are regarded as people or persons and so on. The natural person as a taxpayer, this series is focusing primarily on you, the natural person as a taxpayer, and not on companies and companies' tax. I will also focus on your salary as a natural person who gets paid a salary, but I will also focus on income that you get on your side business. If you have rental property, for example, uma mhlawumbe urentisa ngendlu yakho and receive an income, or you have properties where you rent out your property and receive an income, or also if you do have a side business and you are generating income, I will also talk about how that income would be taxed and how would you do to avoid paying tax on that income or paying more tax on that income and lowering your tax as much as possible on that income. So as much as this series is about the salaried employee, someone who is employed and receives a salary on a monthly basis, I will also touch on your side business, if you do have a side business, like property, as I said, or any other business that you have. So I will touch on that. Now, the reason why, guys, I'm really interested in writing and talking about this topic of tax is because a lot of people don't understand how their tax is charged and how tax is levied in South Africa as a whole. And this is really concerning because if you are involved in wealth creation activities, as I spoke in the series on financial freedom and wealth creation, your money will be taxed. And it's quite important that you know how to avoid paying a lot of tax, because paying tax unnecessarily will undo all of the good work you've done when you were creating wealth. So I'm interested in talking and writing about this topic because I want you to understand your tax incentives, to understand your tax-free income, where you can get bargains, if I can put it that way, and discounts and rebates when it comes to paying taxes. Because people don't even understand their pay slips. Even when you're looking at your pay slip, maybe you might not understand, why are you paying this tax? Why is this tax like that? So those are all the problems I wanna unbundle and help you with, and also help you then understand what income is included in your your gross income in the year and so on. So let's take a look at the Income Tax Act a little bit and generally understand what it means. Generally speaking, the Income Tax Act imposes a liability on taxable income and not necessarily on a gain or profit. But it does have provisions when a gain is made. So again, if you do have a side business or you receive rental income on your investment property, the Income Tax Act will take this into account because that is income, but primarily it just looks at the income that you earn on your salary and wants to charge you pay a tax. But if you do have income on the side, it will also take that into account because that is a gain or a profit, but it will take that into account. So the term taxpayer refers to any person chargeable with any tax levied in terms of the Income Tax Act. So as I stated in the introduction, I'll be concentrating on taxpayers as a natural person and not on taxpayers as companies. So the difference between the taxpayer as a natural person and the taxpayer as a company, this distinction is quite important, and it has a lot of impacts on the manner in which the relevant taxpayer's gross income, your exemptions and deductions, and ultimately your tax liability is calculated. Because as a natural person, you've got a lot of exclusions. You've got a CGT exemption, a capital gains tax exemption. You've got rebates, primary rebates and secondary rebates as a natural person. When you're selling your residence, you've got an exclusion on your primary residence where you won't be charged CGT up to a certain amount. So it's very important that I focus on income tax as a natural person, because it's a bit different from income tax as a company. Although the basics are the same, it will have a bit of a difference, because as a natural person, you have provisions that are made for you that are specific to natural people. And also as companies, there are provisions that are made for companies. So in this series, I'll be focusing on provisions that are made for the company and so on. So as Osamkelo Makoko, I'm at a company that is one of the leading companies in South Africa when it comes to financial services and financial advice, financial products and so on. And I'm currently registered for a course. And I can't even say I'm registered, because the course, you take it internally. It's an internal course and it's optional, of being a tax practitioner and being able to help you complete your taxes at the end of the financial year. So I'm doing that course, and I want to be able to help you, people like yourself, to be able to complete personal income taxes at SARS in a tax efficient way. So that's what I want to do. And also, I did a postgraduate diploma in financial planning at the University of KZN. And there I learned about personal income taxes in context of investing, in context of your side business and so on. So I want to share that information with you. And also, when I write my board exam at the Financial Planning Institute, I'm required to know and understand about tax. And by the way, the Financial Planning Institute is also recognized as a controlling body in terms of providing tax practitioners, just like a body like SAICA, which is the South African Institute of Chartered Accountants, as well as the Law Society of South Africa. Now the FPI has also been recognized as a controlling body, and I want to be part of the FPI. I want to be a member of the FPI and become a certified financial planner. So what all of this means is that I am equipped to teach you about taxes, and I'm also getting more knowledge about taxes through being affiliated with the FPI, through being affiliated with a recognized controlling body when it comes to income taxes, because accountants also know taxes, some lawyers also know taxes, and financial planners or financial advisors also should know taxes, and some of them do know their taxes, and I'm one of those who do know their taxes, and I really want to help you guys with that. That's it for today, and I hope you guys did enjoy this one, and I'll see you on the next episode of this personal income tax series, where I will be taking you through the gross income definition and describing to you what amounts to include in your gross income and how is your tax calculated, and talking about your marginal tax rate and your tax bracket and your taxable income. So I'll be talking about that on the next episode and diving in deeper, so you guys don't want to miss that. That's gonna be a huge one. I hope you guys enjoyed this one again.